Hey folks, welcome back to the Lloyd's Coach. This is Exceptional Risk Advisors YouTube channel where we talk about all things Lloyd's of London. I'm Sean McNiff, and today we have an exciting topic for you. We're going to run through really everything we do for high earning coaches, assistant coaches, and some really unique application of our programs for employment contracts. They're fantastic opportunities in our market, and the individuals that we're insuring really do need your help understanding the solutions that are available to them. So if that sounds like something you're into, let's get into it. So today I pulled a case that we wrote a few years back. The client is a 53-year-old football coach out of the East Coast. Current contract that he has with his school is $5.25 million annually. That's an annual compensation of $5.25 million. Now, the unique thing about coaching contracts is that these contracts carry what's called a termination for disability clause, which means if the client, the insured in this case, can't perform their duties for either 90 or 180 days, depending on the contract, the franchise or the school is able to terminate that contract without any additional money due. So huge exposure to the coach in that scenario. So we looked at a number of different options. We could have insured that $5.25 million on a monthly basis, but the cost of that was a little more than the appetite of the client. So what we ultimately delivered was a policy that would pay the coach $25,000 a month after a 180-day wait, which covered that termination for disability clause period. That monthly payment would pay for 5 years, and after 5 years, if he was permanently disabled, that insurance policy would trigger a lump sum benefit of $6.5 million. The total aggregate of insurance for that coach was $8 million in the aggregate, and the premium for that on an annual basis was just shy of $20,000 a year. Now, I don't know about you, but if I've got a contract for $5.25 million annually and someone told me I could insure $8 million of future income for less than 20 grand a year, I buy that all day. So the thing with college coaches and even high earning assistant coaches is they can't obtain traditional disability insurance here in the US markets. So Lloyd's and the surplus lines markets are really the only place or avenue that they can go for insurance to protect their income. The other piece of this is if you're not working with coaches, the same thing actually becomes true in the executive and professional space. If you're working with any very high earning professionals or executives who have employment contracts, we'd really encourage you to review those employment contracts and look at what the stipulations are for disability. Sometimes they have no stipulation for disability, which questions, where does the risk lie? Generally, clients will purchase those policies on their own. Sometimes those stipulations for disability say that the companies need to carry up to 60% income replacement, 65, 70% income replacement in some situations. Here in the US markets, if you have a client that earns in excess of $1 million a year with an employment contract that requires a 60, 65, or 70% replacement, it's not a problem you can solve here in US markets. So we would say, certainly go to those US markets first, get as much as you can insure within the US, and then bring those opportunities to a Lloyd's cover holder like Exceptional Risk to insure the rest. So with that, I hope we've given you a couple of good ideas as we head into summer. It's a terrific time to speak with coaches. If we can do anything to help, please feel welcome to give us a call or share this video with your colleagues. And with that, we hope you have a wonderful summer, and we'll talk to you soon.